A taxpayer, a few years ago, decided to relocate abroad and inquired on the internet on the necessary requirements. He becomes aware of the 183 days rule, that in order not to be considered tax resident in a country for a given year, he must change his tax residence in the foreign country within the first 183 days of that year. Otherwise, according to the worldwide income principle, it will pay taxes on everything earned anywhere in the world, even to the first country. Without warning, after 2 weeks that country reply, only a few days before the deadline, to tell him that the entire application was rejected because he had not filled in the line of the application regarding the post office box. The taxpayer, after the second application approval, pretended nothing had happened, except that years later he discovered that in the first country there were debts and penalties against him for unpaid taxes, calculated on the earnings of that year, for over 240,000 euros, and that the omitted declaration of income for that year had even been considered a crime, and now a huge debt awaited him in the first country and a trial that could have seen him end up in prison for 4 years.